Next, it's time for business. I'm pleased to announce Caris Garland here in the studio. A very good evening to you.
Hi, Mark.
Great to see you. Now then, we're starting with European leaders pressing China on a gaping trade deficit. This meeting taking place in Beijing.
That's right. It's actually the first in-person meeting since the pandemic of this annual EU-China summit. This time, Brussels is asking Beijing to improve market access to address this annual trade imbalance of more than $200 billion. It was just one of the differences highlighted in the meeting. For China, EU restrictions on technology exports and a probe into subsidies for electric vehicles have tensions mounting. And underlying mistrust, on the eve of the summit, Italy, the bloc's third largest economy, withdrew from China's Belt and Road Infrastructure Initiative. Matthew Mary Caruchet has the details.
It's the first time in 4 years that European Union and Chinese leaders have met in person for a summit. European leaders had a plethora of economic and political concerns on the docket Thursday. Among the most pressing, the EU wants China to improve market access to address a yawning €200 billion trade imbalance between the two sides.
We insist on fair competition within the single market. Therefore, we also insist on fair competition from companies that come to our single market. And I'm glad that we agreed with President Xi that trade should be balanced between the two of us.
For its part, China is unhappy with EU restrictions on technology exports and an EU investigation into Chinese subsidies for electric vehicle manufacturers. It also wanted to signal that it is looking for cooperation and is wary of a Europe seeking to engage in confrontation.
We regard Europe as a comprehensive strategic partner and an important player in the multi-polarized world. We support Europe's desire to maintain its strategic autonomy, practice genuine multilateralism, and join efforts to safeguard world peace, promote development, and address global challenges.
The meeting comes a day after EU member Italy announced that it was withdrawing from the Belt and Road Initiative, China's plan to build a global network of Chinese-financed roads, ports, and power plants. In 2019, Italy was the first G7 country to sign on to the initiative. Italy had promoted Belt and Road as a way of increasing trade with China while getting investments in major infrastructure projects. But in the last 4 years, Italy's trade deficit with China has ballooned from €20 billion to €48 billion.
Time to check in on the day's trading action. Wall Street closed higher this Thursday, the Dow Jones adding nearly 0.2%, the S&P up 0.8%, and the Nasdaq added 1.3% as tech stocks outperformed. Google parent Alphabet gained more than 5% as traders cheered the company's launch of its Gemini artificial intelligence model. Let's take a look at some other business news making headlines. German train drivers from the GDL union are walking off the job for 24 hours this Thursday evening. The strike will affect both freight and passenger traffic, but rail operator Deutsche Bahn says it will maintain about 20% of its long-distance services. It comes after a breakdown in talks with Deutsche Bahn on pay and working hours. European Union talks on world-first artificial intelligence regulations were paused Thursday after 22 hours. Representatives of the 27 member states spent hours wrangling over issues like facial recognition tools and how and when to regulate generative AI. Debate will continue on Friday morning. And Indonesia says it's considering granting visa-free entry to nationals of 20 countries in a bid to boost tourism and the economy. In pre-pandemic 2019, there were more than 16 million foreign arrivals in the country, while up until October this year, Indonesia has seen 9.5 million visitors. US investment firm Arctos Partners has bought a minority stake in the Qatari-owned French football club Paris Saint-Germain. Details were not disclosed, but according to the Financial Times, Arctos will own 12.5% of the club, and the deal values PSG at €4 billion. The club says the investment will go towards operations and supporting its strategic real estate initiatives. Arctos has already invested in more than 20 professional sport organizations globally. And finally, McDonald's is set to open its first Cosmics restaurant this week, a beverage-led concept store that will operate in the same market segment as Starbucks. The first Cosmics location will open in suburban Chicago, with the burger chain planning about 10 more stores by the end of next year. With drinks like the Churro Frappe and Blueberry Ginger Boost, McDonald's will be hoping to tap into the growing popularity of mixed cold beverages in the US. And some interesting food choices also there, Mark, but unfortunately we won't get to try. Those stores are opening in the US only.
Time will tell. Time will tell.
We'll see.
We have a lot of choice here in Paris already, don't we? Karis, thank you very much indeed. Great to see you. Karis Garner there with all the business.